So Crypto Bullseye community, what is up? Welcome back to the channel. Hope you're all enjoying your week so far. We certainly are. It's a big one for us. We've broke the 2,000 subscriber milestone. The channel has grown fast, and I want to thank each and every single one of our subscribers, everyone that shared our content. Appreciate everybody of you that has liked. Thumbs up back to you guys. Thumbs up back to you. And appreciate all the kind comments. So we're going to do things a little bit differently. We're going to bring the community together. We're going to grow the community together. And one of the things that I'm going to do now that you'll see regularly, guys, just go into the community tab on our Crypto Bullseye YouTube channel, and you'll start seeing more polls now. And this is going to tell me what it is that you guys want to see next. So you guys have asked for more tutorials, less price action, and it's a bear market, so I completely understand that. Let's position ourselves to make sure that we take full advantage of the next bull run. So let's educate each other. Let's work together. Start with letting me know in the comments, guys. Where are you guys from? Where's the community from? Let me know. You'll see on here what content does our crypto community most value. You've said trading tutorials. So the one following from that, which I've just posted, is what chart pattern would you like me to cover next? So pop onto the community tab within the Crypto Bullseye YouTube channel. Let me know. Is it going to be rising and falling channels, guys? Is it going to be flag and pennant patterns, or is it going to be candlestick combinations? You're going to guide this channel going forward, so let me know exactly what it is that you want me to cover. Let's get straight into it, guys. The 4 things every great trader must do before entering into a trade. Let's discuss that. Let's get straight into it. Right, okay, so guys, apologies first of all. There's a bit of lagging in the video today. I am getting that sorted. There's a bit of lagging on the screen as well. I am getting that sorted, so bear with me with that. I'll get that sorted for the next episode, guys. Right, the 4 things every great trader should do before entering every trade. It's a process that you'll see quite often in driving. You'll see it often in other things, and it's a process a couple of other traders use. I've certainly heard Akil Stokes. If you don't know of Akil Stokes, he's very, very, very disciplined structure trader. Go and check him out, guys. Look him up. He's very, very good, and he uses the IPDE process, and that's the process that I'm going to tell you guys today. So IPDE, what does that stand for? Identify, predict, decide, and execute. So this is available on the internet. You can just Google IPDE, and like I say, it's just a process that keeps structure within your trading plan. So it's not a go and identify, go and predict, go and decide, and go and execute a trade. It doesn't mean that. It helps you bring structure in any trading plan. So if you're a pattern trader, if you trade flags, pennants, if you trade advanced patterns, bats, Gartleys, whatever your trading plan, you can use this to keep yourself disciplined and ensure that you've got a good mindset before you take any trade. So what does it mean? Identify, predict, decide, and execute. So the identification process, first and foremost, let's have a quick look into the charts and get into what that means. Okay, identify. The first part of our 4-step process, identify. Before we get into that, I'm just going to read you a famous quote from a famous trading Dr. Brett Steenbarger. And if you guys are new to trading and you're looking to enhance your skills as a trader, to develop skills over a period of time and gain your own strategy and your own methodology, then I suggest you read one of his books, which is Trading in the Zone. He's very, very, very good from a trading psychology perspective. This guy's probably, if not the greatest, one of the greatest. So I highly recommend that you do educate yourself with the correct material. Don't go with these get rich quick schemes. Don't go with these ultimate trading strategies. I suggest you learn yourself, because there is no ultimate trading strategy. You can pay thousands, you can pay tens of thousands of pounds for somebody that's going to promise you that, but ultimately you can do this yourself. You can go back test this yourself. You can go and create your trading strategy to your own specific requirements, and you can back test that until you become successful. You can gain the results that you want and you can save yourself money by actual putting real money into something that's a scattergun approach and it's got no structure, no methodology to it. Or you can go and gain the knowledge, gain the education, and you can create your own strategy and you can create your own structure. So guys, what does the great Dr. Brett Steenbergen say? Every trade should be accompanied by a very specific idea of what would tell you you're wrong and how much you're willing to lose on the trade. It's when losses surprise us and become too large that they're likely to create disruptions in our mindset. So that's Dr. Steenbergen, one of his famous quotes. Like I say, go and check this guy out if you're new to trading. He's very, very advanced. He's been in the industry for decades and decades. You can learn a lot from this guy. He's got plenty of books out there. Check him out on YouTube. He's got 3-minute tips on YouTube from a psychology perspective. So I highly, highly recommend that you go and check this guy out. So what does he mean by that? This is where risk management comes into play. Risk management is one of the key things to trading. You've got the trading psychology, you've got risk management, and then you've got the trading actual plan itself and the strategy. So you might think that that's the most important thing. You'll actually find that the actual psychology of trading is the first and foremost thing that you're going to learn that's the most difficult to crack. Human emotions are built differently, and 90% of traders lose 90% of their capital in their first 90 days. And that, guys, is fact, unfortunately. So this is why it's best to sit down, find out what works for you, what time frames work for you, how often you can get to the charts, sit down, go and back test a strategy. It could be any strategy. Go through and go 1, 2, 3, red. What happens after 3 reds or 4 reds in a row? How many greens do you get? Don't go and trade that strategy, guys. It's literally something I've just made up quickly. Go through, test patterns. How would you trade it? But what you need to do is remember that habit is one key thing. And this is why the IPDE process is so important. It does help you create that habit. If you just turned on the computer, even if you've got a trading plan and you jump in, your setup's there and you jump into it, IPDE will help you settle down, check out the higher time frames, decide what your thesis is before implementing the trade in a rush. It'll help you settle down and it'll give you a little bit more structure to your trading plan. So risk management, the actual skill of trading, your trading plan, your trading strategy, and more importantly, the trading psychology is one of the most important things. So let's get into identify, guys. Identify could mean if you're trading a strategy and you've got a strategy where your trading strategies in a specific time frame, and then you've got an identification strategy in a higher time frame, which is quite often the case, and it helps you create a bias depending on whether you're a trend follower, whether you're a counter trend trader, whether you're a range-in trader, depending on what it is that you guys do. It's probably a good idea to have a higher time frame thesis. So we're on the 3-day chart here on Bitcoin, and let's just say, as an example, you go with one of the most basic trading strategies, a trend breakout. And I don't just suggest you guys just go and do trend breakout strategies, because you need to add additional filters to give yourself additional confluence that the trade's going to go in your direction. Remember, the markets do whatever it is that they want. All we can do is gain probabilities in conjunction with our own back testing and what the likely scenario is of us being right and getting it right more times than we're actually wrong. So we need to add additional filters in there. They could be as simple as a stochastic RSI. You could be using divergences, all sorts of different things that you could build into your trading plan. But I suggest, if you're new to trading, go over and do the most simple one first, and then add in the filters that work afterwards and get additional percentage probabilities that the market's going to move in your favor. So if you've got an identification, should I say the first part would be the identification. So if we're trading the 3-day chart or the 1-day chart, and our trading time frame, just use the 1 day as the example, and our trading time frames the 6 hour, we can use the daily to go into to identify the trend. And if we're a trend follower, then we can identify that what is it that we need for us to continue the trend. You can see on the daily, we're bearish now. We're creating a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So as far as the higher time frames concerned, we're bearish. And if you're a trend follower, then you'd be looking for a continuation of that trend to follow in that direction. So you'd be looking for bearish. You'd be looking for bearish trades in this example. So you could then go into your trading time frame, which would be the 6 hour, and look for additional reasons for you to exit, depending on what it is that you're actually trading, depending on what your strategy is. You could look for things like a double top. And if I just zoom in here quickly, you can look for candlestick signals, such as we've had a double top here, we've had a rejection, market's pulled up. Sorry for the lag, guys. Market's pushed up, it's pulled back, it's tried to regain this level. It hasn't managed to regain this level. It's tried again, and we've had what's called a lower low, lower close candle, which means that candle's closed below the whole of the extreme of the previous candle. And that could be a buy and entry on that lower time frame. So you do look for things for a continuation, and one area for a continuation or a signal of a continuation would be this trend line here. It's been holding this trend line going back since November 2021, so some time now. So that could be a reason for a signal for identify. You're predicting that the market's going to move into a continuation, so that's predict. You're deciding by whatever it is that your trading strategy is. In this case, it could be a double top and a lower low, lower close. It could be a break of this trend here. Broke straight through that trend and come back, likely to retest in this area, and there's a higher probability that you're going to continue in that direction to the downside to come back and test one of these bottoms here. So you're deciding based on your strategy, and depending on what your strategy is, I'll give you a couple of examples there. Let me know in the comments, guys, if you're new to trading and you've no idea what I'm going on about, if you've got no idea what a trading strategy is, how you can implement your own trading strategy, how you can understand that, how you can plan for it. There's lots of different examples that we can use. There's lots of different chart patterns that we can use and implement within our trading plan. There's all sorts of different things that we can do. Risk management is the key to any successful trading career. But let us know exactly what it is that you want me to cover next, guys. If you want us to go over trading strategies, let us know in the comments below, and we can go over trading strategies. We can start with the basics and we can work our way up to more advanced trading strategies. Just let us know exactly what it is. If you're struggling with risk management, if you're struggling with psychology, let us know exactly what it is in the comments, guys, and I'll promise I'll try and tailor the future content around it, around yourselves. So I want you guys to ultimately start to interact with each other. At some point in the future, we'll be doing more live trading, so watch out for that. It's going to be a couple of months yet, but that's something that I'm looking at doing. So stay tuned and subscribe if you do like the content, guys. Don't forget to subscribe. And again, thank you to all of our 2,000 subscribers. So that's well, if we don't identify, predict, we've decided, and then the execute, guys, is just press the button. Press the button. A lot of people struggle with that. And one thing I'll tell you guys, if you're new as well, you can go back and you can back test to your heart's content. But when you start using a real trading account, that's when the psychology really hits in. So back testing is a fantastic thing to do. If you don't do it, in my opinion, you're probably not going to be successful. You're going to be one of the first, you're going to be one of the 90% that lose 90% of the capital in the first 90 days. So you can actually plan for this. The difference is between a new business that usually fail within the first year or the first 2 or 3 years. The difference is they don't have any back testing results, guys. So back testing is an absolute treat if you use it correctly. If you discipline yourself, don't rush into anything, then you can actually find out how well your business is going to do before you've even opened the doors. So trading's a business, treat it as a career. Let us know what stage you're at in the comments, guys. We've gone through the process of why identify, predict, decide, and execute is so important. I've gone over famous trading quotes. Let us know in the comments if you want me to go over more famous trading quotes. If you want me to know, to let you know what are the books that I've read, are the trading books, who's good as far as trader mentorship's concerned. Let me know in the comments, guys, what stage you're at. Let's bring the community together. Don't forget to tell me where you guys are from and interact with each other in the comments. But remember, I'm not going to ask you to join my Telegram group. I'm never going to ask you for any money. So beware of them scammers in there, guys. I'm trying to do something about it. And also, before I go, if you are new to trading, guys, I've got an Udemy course. This is aimed at beginners in cryptocurrency and beginners of trading. And what you will get out of this is, just go over here. What is cryptocurrency? Risks of cryptocurrency, how to read a price chart, how to trade a price chart, how to protect your capital, bonus trading strategy, bonus trading spreadsheet, and it's just a step-by-step process. So that could help you to start your trading career, guys. It's about $24.99 if you wanted to take advantage of that and you are new to trading. Don't forget, let me know in the comments, guys. I hope you enjoy the rest of your week. Take care of yourselves. Goodbye now.